How can one invest in US market with Canadian dollars? The easiest and cheapest way is buying Canadian ETFs that track S&P or NASDAQ index. In this video, I will go through some of the NASDAQ index ETFs that are traded in Canadian dollars. Hi everyone, hope you all are doing good. As you all know, I am a Canadian dividend investor, and if you have watched my Wealth Simple portfolio update videos, you may have noticed that I have only invested in Canadian stocks and ETF that track TSE index. But now I am looking into investing in US markets. And since I do not have easy and cheaper way to access US dollars, I will be investing in ETFs that are traded in Canadian dollars but tracks US stock exchange. I am not a financial advisor, and please do not consider the content of this video as a financial advice. This is me going through some of the options that are available for me and investing in those stocks or ETFs that I feel is correct for me based on my financial comfortability. I will be going through a list of ETFs that track S&P 500 and NASDAQ index. But in this video, I will be covering only the NASDAQ tracking ETFs. I will have soon another video for the S&P 500. So if you like this video, please give a thumbs up, and if you are not subscribed yet and like my content, please subscribe. When you buy an ETF that holds foreign equities, in this case US equities, you are taking on two different risks. The first is the market risk. Owning a stock or ETF itself comes with the risk because it can go up or down. The second risk is the currency fluctuation risk. You are investing in Canadian dollars, but the stocks in the portfolio are traded in US dollars. So if the US dollars rises in value relative to the Canadian dollars, you get a boost in returns. On the flip side, if the Canadian dollar rises in relative to US dollar, then the returns will get a hit. Because of this, there are two types of ETF: NASDAQ 100 Index CAD funds and NASDAQ 100 Currency Hedged CAD Index funds. But please note that irrespective of which type of ETF you own and where you own, be it in RRSP, TFSA, RESP, etc., if the ETF pays dividend, the withholding tax will be deducted from the dividend before depositing into your account. So what is the currency hedged fund? Currency hedged funds are designed to eliminate the risk of currency fluctuations. In our case, it's hedged to Canadian dollar. That is, if Canadian dollar rises in value compared to US dollars, then it will not impact the returns from the investment. In this video, I'm not going in detail on this, but let's look at this simplified table to understand the high-level difference between hedged and unhedged fund. I'm ignoring the fees to make it simple to understand. When NASDAQ index goes up and the Canadian USD remains same, which is not a realistic situation, both hedged and unhedged funds provide the same returns. Now, if NASDAQ index goes up and Canadian dollar increase compared to USD, then hedged fund provides a better return because it's hedged against the Canadian dollars. When NASDAQ index goes up and the Canadian dollar decreases compared to USD, then unhedged funds provides a better return. During any period when the Canadian dollar rises in value, using ETFs with currency hedging will lead to higher returns in your foreign equity investment. And whenever the Canadian dollar loses value relative to the foreign currency, the unhedged version will be the better option. Now it depends on individual whether they prefer hedged or unhedged. For me personally, I prefer unhedged as I believe hedging on what the future value of a currency may not always be accurate. Also, hedging ETFs do have additional fees over the documented MER. Irrespective of that, I don't feel there is a clear-cut winner. I will be going through 3 hedged ETFs and 3 unhedged ETFs and select one from both lists and add it to my watch list. But I will be only investing in one ETF for now. The first ETF is XQQ, iShares NASDAQ 100 Index ETF Canadian dollar hedged. It is currently trading at $120.73. I will look at 3 data points: performance, fees, and holdings. Let's look at the chart in 1 year. The NAV have increased from 93.86 to today's $120.73. Because of COVID, I generally don't emphasize on 1 year returns. I feel that the increase is more because of market getting back to normal from the all-time lows of COVID. So my focus is mainly on 3-year and more. For 3 years, it has a good returns, almost double, and way better when we look at the 5-year mark. So if you had invested $10,000 in 2016, it would have returned a $31,000 today. However, it always has almost 0.70% in less returns compared to the benchmark index, which is not appealing. And it is also because of the fees of the ETF. The fees for this ETF is very high. The MER is 0.39% and the management fee is 0.35%. And as per my understanding, the fees for hedging would be on top of these fees. Please do correct me if I am wrong here. The inception date for this ETF is 2011. It has a quarterly rebalance frequency. The distribution yield is 0.24% and the total number of holdings in the ETF is 102 companies. Apple, Microsoft, Amazon, Google, Facebook, Tesla, PayPal, Adobe, etc. The sector-wise exposure is the ETF that track NASDAQ index will always have the similar sector-wise breakdowns. The next ETF is ZQQ, BMO NASDAQ 100 Equity Hedged to CAD Index ETF from BMO Asset Management Group. The current price is $110.83, a $10 less than XQQ. It has a distribution yield of 0.30%, which is higher than XQQ, and the fees are exactly the same as XQQ. MER of 0.39% and the management fee of 0.35% annually. The inception year is 2010. Now look at the performance of this ETF. The NAV value in August 2016 was $39.91 and it increased to $110.83 in 2021. Even though the growth looks similar to XQQ, when we compare the deviation from the benchmark, it is around 0.80% constantly across each period, which is more than what we saw for XQQ. As for holdings, there are 103 companies. The top 10 is the same set of companies and in the same order as that of the previous ETF. The sector allocation is also similar. The third and final ETF in this category is Invesco NASDAQ 100 Index ETF, ticker qqc.f. It currently trades at $127.21, the priciest of the three. However, the management fee and MER is way less than the other two. MER at 0.26% and management fee at 0.20%. The inception date of the ETF is also 2011 and has a highest distribution yield of 0.76% of the three. This ETF has 104 companies in the holding, and the top 10 holdings are exactly the same as the previous two. The sector allocation is also similar, majority to information technology, followed by telecom and then consumer discretionary. Let's look at the NAV performance now. For the last 5 years, the NAV has increased $41 in 2016 to the current rate of $127, which is in the same range as of the other two ETFs. But since the fees are much less for this ETF, the deviation from the benchmark is lesser compared to the other two. If we compare the performance chart of all the three ETFs, you can hardly see any difference. This is for a 10-year period. For this period, XQQ edges out to the other two, but that too by a minute margin. When we look at 5-year chart, almost at the end we can make out the three colored lines. Other than that, it looks like a single line. In this chart, qqc.f did a better compared to XQQ and ZQQ. The same for 3-year chart. QQC have an edge, same for 1 year and year to date. So of the three, I don't see any much difference between the three. Only thing I can point out that qqc.f has a lesser fees, and because of that the ETF follows the index benchmark very closely. Now I will go through the NASDAQ index funds that are not hedged with Canadian currency. Here too I have 3 ETFs that I found interesting. NASDAQ 100 Index ETF, ticker HXQ. The inception date of the stock is 2016 and the currency price is 54.97. You may have noticed that the price of the hedged ETFs are above 100, whereas the ones that I have here is below the 65 mark. Also, compared to currency hedged ETFs, these ones are much newer ETF. The inception date of hedged ETFs were 2010 and 2011, whereas these ones are all after 2016. Another difference that you will notice is the fees. That is also comparatively less. For HXQ, the MER is 0.28% and the management fees is 0.25% annually. Performance of HXQ is similar to what we have seen before. If we look at the 5-year mark, August 2016 has a NAV of $17 and it increased 3 times to the range of 54. And so a $10,000 in 2016 will be around $35,000 today. Since these are not hedged, you can see that the returns closely follow the benchmark index. Here the difference is only around 0.10%, and in the last 1 month it even outperformed. Not much difference in the holdings and sector breakdown, similar pattern and same set of top 10 holdings. The second ETF is a BMO one, BMO NASDAQ 100 Equity Index ETF, ticker ZNQ. Current market price of 62.81, it has a distribution of 0.30, whereas the Horizon HXQ did not have any distribution. The fees for this ETF is on the highest side, MER of 0.38% and management annual fee of 0.35%. The inception date of the ETF is 2019, comparatively new ETF. Since it is a new ETF, we won't be able to compare the 3-year or 5-year chart. But if we look at the historical price chart from inception, it started off with $30.19 and consistently increased $11 or $12 by every year. Now comparing the performance of the ETF with reference to benchmark, it's not appealing as HXQ. The difference is above 0.70% and even to 1%, which is a major deviation. The sector and holdings breakdown, no much difference at all. The final ETF is a brand new ETF. It is Invesco NASDAQ 100 Index ETF. QQC is the ticker. As you see, this is a new ETF that was launched in May 2021. The unit price is only 23.34. The management fee is also low, 0.20% annual. They have not yet published the MER as it is a brand new ETF. Unfortunately, we cannot compare the performance, but by looking at how the index performed and other ETF have performed, we can predict that in next 5 years, the price may go to the range of $69 to $74. This ETF also have the same distribution yield as its hedged counterpart. As for holdings, there is nothing new here as we have seen before. Similar breakdown and same set of stocks. Now selecting an ETF to the portfolio, I am not bought by the need of a currency hedged ETF as of now. I may buy one in future, but as of now, after the analysis I did, I am leaning towards the unhedged ETF. And the one that I want to add into my portfolio is QQC. It's a brand new ETF, so I will be entering at the beginning of the growth. The fees are good and I believe on a long run this will be beneficial. So that is it from my side for now. Let me know your thoughts about hedged and unhedged ETFs. Also, did I miss any ETF in my analysis under this category? And what is your opinion of QQC? Please let me know your thoughts in the comments section. Thanks for watching. Bye.